Hello, fellow traders and technical analysts. This is Matt with Ask Slim. In this video, we will be discussing how we use the Ask Slim methodology to support 5 important aspects of trade planning. Those include 1. Making sure that we are aligning our outlook period for the trade we are considering with our chart analysis. 2. Determining directional bias with the help of momentum indicators. 3. Using swing high, swing low techniques to help pinpoint key upside and downside levels. 4. Defining our entry signals in advance. And 5. General guidelines for position sizing. Okay, here we go. What we're looking at here is our Ask Slim multi-timeframe chart grid on the Thinkorswim platform. It includes our weekly, our daily, our 2-hour, and our 15-minute charts, and it's overlaid with our custom studies and indicators. This overall setup is a very dependable way for us as technicians to evaluate the conditions of stocks, ETFs, and futures. In this case, we're going to be reviewing Caterpillar, symbol CAT. Let's first talk about aligning our outlook period that you're wanting to trade with your chart analysis. So let's say, for example, you wanted to do a trade plan with an outlook period that consists over the next 1 to 5 sessions. So what is the outlook over the next 1 to 5 sessions? Because this is an outlook that we would consider to be near term, then it's important that most of our analysis and measurements are done with the intraday charting timeframes. That would be, in this case, our 2-hour and our 15-minute. Specifically, we are going to use the 2-hour chart here to determine our directional bias. So that's the second thing we're going to look at here in terms of the trade planning aspects is our directional bias. We have 2 custom momentum indicators that we use to help determine the overall directional bias. The first is our slim ribbon momentum indicator, which you see here. We've developed a custom script that colors the candles based on the overall condition. So it's made up of 3 exponential moving averages, the 8 period 13 and 21, and our script colors it based on the overall alignment of those exponential moving averages. When it's positive, it is green. When it is negative, it is red. And when there's a conflict between them, it is purple. The second key momentum indicator that we have developed that we use is the reversal scout. So when that momentum indicator is negative, it is purple. When it is positive, it is green. Now the reversal scout is slightly more sensitive than the slim ribbon. We've done that on purpose, so it can help us get a look at the turns a little bit quicker, but it has been designed to remove as much as possible the unnecessary whipsaws. Both of our momentum indicators on the 2-hour chart are currently positive. You can see that the reversal scout here turned positive on 12/2, and you can see that the slim ribbon has turned positive on 12/6. So this would suggest that our directional bias for our current trade planning should favor long side strategies. So now we're going to look at the third aspect, which is key levels in terms of trade planning, and we're going to look at how using the fib extension and retracement tools can help bring confidence to your overall trade planning because they provide you with a very objective approach to determining these key levels in terms of the upside and downside targets, and when your analysis needs to be reevaluated due to the analysis possibly changing, and where you may need to do some adjusting to your overall position. Because of the overall bias being bullish, and that would suggest long side opportunities, I'm going to start with the upside key levels and targets. So I'm going to make sure that I have the fib extension tool ready to go, which I do, which is part of the overall Thinkorswim toolbox. And I'm going to do a couple different draws using the 2-hour chart patterns here. So what I'm looking for are swing lows and swing highs and then swing lows, that formation to give me an opportunity to make a projection where that next price wave could be. So I'm going to do a couple of these, and what I want to look for are certain key fib extension levels and also a confluence of those levels that could serve as magnets to that next extension. So I'm going to start with the 191.36, where I've labeled as number 1, so this swing low, this key swing low here, number 2, which is a swing high, and then number 3, which is another swing low. Now I'm going to do another draw where I'm going to start with 1A, I'm going to go up to 2A, and then I'm going to go to 3A. So that was a very powerful move without much of a retracement there. And what I'm going to look for then, as I mentioned, is some key levels. So typically we look for the 78.6 or the 100%, and you can see that those were achieved already based on this move. So this wave here, those key levels of the 78.6 or 100% extension of this wave has been achieved. So in this next wave here, what I'm looking for is for us to get up to the 100% of this wave, and then we still have the 161.8% of this initial wave. So there's a confluence of fib extensions in here. Furthermore, we have a level that comes over from the daily chart, which is the short-term fib retracement level is 78.6, which is identified based on this peak here. So we do the swing high to this swing low, and you can see that that 78.6, it runs up here, which falls into this target zone. So based on the overall bullish current bias in the 2-hour, the next price leg, the upside price leg that occurs is likely to bring it into this target zone. All right, so now let's look at the downside levels as they pertain to likely pullback areas, support zones, and overall levels that would suggest that this near-term bullish outlook for the trade plan needs to be reevaluated. So I'm going to remove these so we can have less price clutter on here. And I'm going to change this to the fib retracement tool. And I'm going to do a draw from what I've identified and labeled as 1B, which is a swing low, to the swing high here. And you can see that we have some levels identified here. And where I'm going to focus on is that typically in a bullish pullback, you get a support that comes in between that 38.2 and that 61.8. If it's a very strong rally and the buyers are very anxious, you may only get a pullback that stays confined within the slim ribbon. So what I've done is I've identified this zone here between about 202.63 to 198.75, and this is where I would look for a typical pullback in Caterpillar right now that could be a place for an entry. All right, if we were to break below this 78.6 here, that would suggest that this overall bullish outlook is likely changing, and it would negate this bullish outlook. And it would also suggest that Caterpillar is likely on its way to retesting these lows back here that it had done in September and October. So as long as it can stay above that level here, our price targets based on the overall condition would be up in this zone here. All right, so now we're going to talk about entry signals, which here are our fourth aspect of the trading plan that we are going to cover in this video. And as a trader, you're never going to be perfect with your entries. So it's best to be flexible with those entry approaches as long as that directional analysis hasn't changed and you stay within your risk management parameters. So here are a few examples that you could think through as you're looking at various approaches to entries. One of those would be simply a pullback to a specific support level that you've identified. And as soon as it would hit that support level, in theory, then you would look to execute that. Now, obviously, this video is not about advising any buys or sells. It's simply a way to go through the instruction best practices that we use as we think through our trading plans. Okay, so number 2 would be, as another approach, a pullback into support. So it might be somewhere into this zone here, and then waiting for the momentum continuation signal to appear maybe in a shorter term time frame. So it might be something like this, that we get a pullback. You would likely see this is the 15-minute, which is the shorter term time frame. We have our 2-hour 15-minute, a pullback where the slim ribbon goes negative here, and we get into the support zone somewhere around in here. And then what would happen is we would watch for the slim ribbon to turn back positive in this shorter term time frame. And once it did, that would signal an opportunity for entry. Now this happened over here, you'll see that when we had the reversal scout turn positive, we had this little shallow pullback here, and then we saw the slim ribbon turn back positive. So we had bullish momentum here via the reversal scout, and the slim ribbon turns positive. So we have an alignment or confirmation, and that would be an entry signal if you are a momentum trader, where we have confirmation of a shorter term time frame with the dominant time frame that you would be using. All right, so next, there's a final one here I wanted to share, and that would be looking for various momentum studies that would suggest that there's a continuation in place. And the one that we use is the slim ribbon PO. So it's a combination of our slim ribbon and then also another study that looks for oversold and overbought conditions. And the beauty of this study that we've developed is that it takes into effect the overall dominant momentum condition and lets you know if there is a signal for likely continuation. So I'm gonna use our daily chart here as a couple really good examples here, and I'll bounce over to that 2-hour. So you can see here that there was a low that was in place. The slim ribbon was negative. We rallied here, but the slim ribbon maintained its negative condition, and then our internal indicator that is tracking the oversold and overbought conditions, it registered overbought. So it got up over here over our signal line. And then it threw a signal to let us know that there was a likely resumption in this negative dominant momentum. And you saw that that was spot on as CAT went from about 198 down to 188, and it maintained that negative momentum. There was also another signal fired that occurred here on the positive side, where the slim ribbon turned positive here. There was this pullback into support, and then the slim ribbon PO fired positive, giving you a great signal for a rally. We had another signal here that occurred, just a small one here, and then you can see when it gets neutralized out. So we had a negative signal here, and then the slim ribbon went positive, and it gives you this blue arrow that lets you know that that signal has been neutralized. But then we had a signal here where we had a rally that occurred, got into that oversold, and then the signal came, and we went from about 198 down to about 190. So overall, this is a very dependable way to look at signals on entry through momentum continuations. All right, so the final component that we're going to cover is position sizing. Every trader needs to determine their own overall trading style, which includes defining their approach to position sizing. For position sizing, our general guideline is to look at the directional bias of the next larger time frame and see if it's in alignment with the dominant time frame that you're using for your directional bias. So in this case here, we would be looking for the daily chart to help us with our position sizing, because that's that next larger time frame on this chart grid that we've established. If it is in alignment with the 2-hour, then it's okay to move forward with the trade plan that would include however you would describe a full position size. So again, we're going to look at our daily chart as a guide to see if we have alignment going on. So on the daily chart, we use the same two momentum indicators to assist with determining directional bias. Those are our slim ribbon again, where we have the color coded candles, and then our reversal scout. So when that reversal scout, which is this line here, which was purple, which you can see gave just a fantastic signal up here, and it stayed negative this whole time. So that's why you don't want to fight momentum or fight the trend. And so we've developed two fantastic momentum indicators to help give us a sense of what that dominant momentum is. All right, so those are the two momentum indicators. So right now what's going on with Caterpillar is that both momentum indicators are still negative. However, you can see that based on this price action, which we've had this sharp rebound here, that the momentum indicators are just about ready to either shift neutral or potentially positive, barring any significant retracement over the next few days. So because of this, the shape of these momentum indicators, the condition of the daily chart momentum is slightly negative to neutral, but purely speaking, this is still in a negative condition, so it is not in alignment with the 2-hour chart. I also want to take a look at our cycle analysis here for Caterpillar, which helps to give us an overall some of the evidence of the directional bias. And so I'm going to look at our lows, and I'm going to look at our peaks over the last few cycles here. I'm going to start with this key low here, which occurred in late September, and then that next low, which occurred here over in late October. You can see in this cycle here, we got real close. We did not violate that prior cycle low. And then when we completed that cycle, our peak actually occurred on the right side of this cycle, and we had a higher low. So we call this a right-hand translation, this configuration, which typically would project out the next cycle to be positive. And that's exactly what occurred, where Caterpillar made this low here, and that next rising phase just exploded on the upside, actually taking out the prior cycle peak, which was here. And we made this huge run. However, this cycle was extremely volatile, and we actually then, during that peaking phase, we have a rising phase into that peaking phase, and then our declining phase. So as we got into our declining phase, we had this rapid descent lower, retracing almost all of that gain. However, we did close above these lows, but we did break down below that prior cycle support. So all in all, this cycle structure, given the new peak that was made, the breakdown, and now this rapid rebound, is similar to that momentum condition, which is negative to neutral. So we have a slightly overall bearish condition, again, which is on the verge of looking to shift, but right now is more bearish than bullish. So because we do not have an alignment between these two time frames, our position sizing based on our guidelines would suggest that it should be smaller right now relative to what you would have as part of your own trader style, a full position size. Okay, so we have covered the 5 aspects of trade planning. We've taken a look at Caterpillar here. Caterpillar in the 2-hour, if you had a 1 to 5 day outlook, is showing a bullish bias. We've identified our target zones. We have some support areas. We've talked about entry signals, and we've talked about position sizing. So I hope this video has been extremely informative for you and has been of value. And if it has, make sure to subscribe to our YouTube channel and check out our huge library of videos where you can learn more about our unique style of cycle analysis. And if you really like what you've seen in this video, you can become an Ask Slim premium member. You can go to AskSlim.com. We currently have several options to choose from and great holiday specials going on. So go to AskSlim.com, check those out. All right, this is Matt with Ask Slim. I'm signing off, and great trading to you all. Take care and all the best.
Thanks for watching that Ask Slim special video. Now take a quick peek at our annual Ask Slim holiday special. Great holiday gifts for traders and investors. Give the gift of Ask Slim. These are our special rates, in fact the lowest of the year for 3-month memberships, and they are non-recurring. So if you give this gift to somebody, you won't get billed again, and they won't get billed again either. Give the gift to someone you know who loves trading and investing, or give the gift to yourself. It's great for first-time members at AskSlim.com to really see what we do. Use this special to try a higher level if you're already an Ask Slim member, and do that for 3 months. And then we're going to give you a bonus gift. We're going to send you an Amazon gift card that's going to help you pay for part of these memberships that you give to somebody or give to yourself. Let's take a look as we go to the Ask Slim page in here. And this is the main page, and what I want you to do is to go to the very top, as you can see, that line for our holiday specials, and then click on this little green box, save 30% or more, and that's going to take you to our special holiday page where we have these offers, and you'll be able to see that there are 4 different gift options, and those are for our level 2, 3, 4, and 4+ members, and you can see that we're going to give you back an Amazon gift card depending on which one you take for level 2, level 3, level 4, or level 4+. So if you take level 4, you're going to be able to get a $100 gift card back for that 3-month membership. And then we have the list in here of everything that's included in each of those memberships, just a tremendous amount of content that is both educational and analytical. There's no place you're going to learn more than what we teach with our amazing staff of 4 analysts that teach you all of the time the great things you need to know about trading and investing. So please do go to AskSlim.com and take a look at those holiday specials and give that gift of Ask Slim. Thank you very much for listening.